Welcome back to the Group Practice Accelerator podcast, brought to you by Polaris Healthcare Partners, where we leverage decades of healthcare and business experience to drive growth in successful group practices just like yours. If you're a healthcare entrepreneur and you're interested in building, scaling, or exiting your group practice, you've found not only the industry's leading resource for business education, but a team of trusted advisors dedicated to helping you achieve and exceed your goals. In short, the team at Polaris creates clarity, confidence, and results. I'm your host, Jamie Falash, and the Group Practice Accelerator podcast is on the air. Hey everyone, thanks for joining me, because if you're into true crime like I am, you're going to love this episode. Are we solving crimes today? Oh, likely not. But we are going to reveal what might be going on in your business without you even being aware of it. We're going to dissolve some financial smoke screens and unravel secrets and take a deep dive into the embezzlement that takes place in more practices than you probably thought possible. And I don't know about you, but nothing would burn me more than knowing one of my employees or colleagues had sticky fingers and was helping themselves to what doesn't belong to them. Now, you might be thinking this would never happen in my business. I trust my employees implicitly. Well, let me tell you, the data and our expert state otherwise, and you'll be surprised to hear what our guest has to say. So without further ado, please help me welcome David Harris, founder and CEO of Prosperident, who probably uncovers more fraud and crimes than Dateline, and is going to share his experience with us. Not only the basis for fraud within dental group practice, but ways to protect yourself and your business as well. David, welcome to the show.
Thanks, Jamie. That was a great intro.
We always like to talk you up, and really, you must see some just astounding and inexplicable things, which you then are able to explain after your investigation. But before we get into all that, tell our audience a little bit about you and a little bit about Prosperident, if you could, please.
Well, for the last 35 years, actually closing in on 37 years, I have been chasing and catching those rotten people who steal from dental practices.
Wow.
And there are a lot of them. I got into this profession in 1989 completely by accident when a friend of mine who was a dentist called me for help.
Mm-hmm.
And I've been here ever since. And I started, as a solopreneur and just working on my own. We now have a team of 25 people, including some fairly specialized investigators who will handle, for example, we have a couple of people who do orthodontic practice investigation because the business model and the software are different.
Oh my gosh. I can only imagine the things that you've uncovered, and I'm excited for your business, but I'm also a little disappointed that this is even necessary. There's that element of humanity that we all don't want to believe exists, but boy, we better have our eyes open.
Embezzlement has been around pretty much forever. The ancient Egyptians spent more money building the pyramids than they really should have. So this is not a new phenomenon. And the first documented case of embezzlement that I saw in the United States in dentistry was in like 1852. And when you think that was about 10 years after the first dental school started operation, it didn't take long.
Gosh, that's astounding. Well, I mean, there's so much curiosity around what you do. I'm sure we could fill hours of like some true crime worthy stories that you could tell us, but maybe we start with the root of the problem, and that's got to be dishonesty, right? I mean, we all want to trust, but how well do we really know the people that we work with and work for us?
Well, I think you have three factors that come together. And one of them you mentioned, most dental practices, and I'm including group practices and DSOs in this category,
Okay.
do a terrible job of pre-employment screening.
Absolutely.
And this is known to the criminal community. And, there are posts on chat lines for convicted felons where they say, go work in dentistry because they really don't screen you very carefully.
Really?
Really.
Oh my.
So that's one factor. The second factor is that most practices, and again, I'm making a comment here that applies from everything from solo practices to the biggest DSOs. Most of their control systems, when it comes to financial controls, are a little bit weak. And then the third factor is the other thing you mentioned, which is dishonesty. And we know statistically that a certain percentage of the population in the right situation, or I guess maybe the wrong situation, will decide that stealing is their way out of it.
That's just bananas. What percentage is that?
Good question. My personal answer would be 100%. In other words, I think that for every one of us, there's a certain amount of pressure that would result in us stealing. And when I say that, I'm sure some people in the audience are saying, no, it would, I would never steal under any circumstance.
Cross
But
my arms a little
let
bit.
me let me paint a picture for you. Let's say the power grid goes out and it's not coming back anytime soon. And after a couple of weeks, your kids are hungry, the food in your refrigerator is all gone bad, and there's a grocery store down the street that's all locked up, and inside is a whole bunch of canned goods. At that point, people are going to say, well, when it comes to survival of my kids, I'll smash that window and take some of that stuff. The thing I'll point out is that the threshold amount of pressure that would lead somebody into criminality is different for each person. And for some people it's high, and for some people it's really low. I mean, I've seen embezzlers steal because, they wanted that brand name purse and they didn't have the money for it. So in that case, the amount of pressure it took to convince them to steal was really low.
Well,
But
right, and that's not an extenuating circumstance where your survival is at stake. That's
no, it isn't. But that's my point. That threshold is different for each human. And unfortunately, for some, it's really low. In terms of what percentage of the population that is, I couldn't tell you. But I think the capability to break the rules is inside each of us in a certain set of circumstances.
oh, that's fair. I think we wouldn't be being honest with ourselves if we didn't agree with you, given certain circumstances. Now, how do you most often find out that somebody's being dishonest and really committing a crime if we're going to call a spade a spade? Do you find out generally, is it the business owner that uncovers it or other employees that report it?
A lot of times it's us, the business owner, the dental practice owner, because we only work with dentists, calls us and has suspicions but hasn't been able to confirm them. And then it's our job to stealthily, because our investigations are all invisible to the team that we're looking at,
Okay.
stealthily find out if the practice owner was right. That's the way we find most of our embezzlement. We also get a smaller cohort who come to us and they've already caught somebody red-handed. Now they need a full investigation, because most thieves who are stealing in dental practices will use at least 3 different methods simultaneously. So when somebody, quote, catches somebody red-handed, typically they found one of maybe 3 or 4 different methods that person's going to use. And one of our jobs is to kind of find the fullness of what happened, and also to help the victim get back as much money as they can.
Okay. Well, I'm going to jump ahead because I had another question in mind I wanted to ask you, but what are some of those common methods?
Methods of stealing?
Yeah.
That's probably not something I'm comfortable talking about in a public forum. In really general terms, there are 2 ways you could steal.
Yeah.
You can steal on the expense side of the ledger, which means getting a practice or a group to pay out money that it really shouldn't. Or you could steal on the revenue side, which means taking patient payments or insurance payments. So what I'll say is that the majority of stealing in dental practices happens on the revenue side. And one of the truisms about dental practice control systems is that expenses are much more scrutinized than revenue. So that kind of means that there's more opportunity to steal incoming funds, again, patient or insurance payments, than there is to, for example, run a bunch of personal expenses of the employee through the practice's accounts.
Makes perfect sense. Maybe let's talk about some of the red flags or anomalies that kind of come up within that.
Absolutely. And there are 2 categories of red flags. There are financial anomalies and behavioral ones.
Okay.
Maybe I'll start with the behavioral stuff because that's easier for most of us to visualize. One thing we know about thieves is that they like to be alone when they steal. And partly it's because they don't want to be observed, and partly because stealing takes concentration, believe it or not. And it's hard to do that when the office is open and the phone's ringing and you've got patients wandering around lost and so on. So a lot of thieves will get there before everybody else, or they'll stay late, or they'll make a quiet visit to the office on a weekend and do their dirty stuff then.
Oh, wow.
Another behavioral characteristic is that Thieves are pretty territorial. I mean, they get very possessive about their duties because they need to keep the combination of duties they have now in order to steal and hide it. And when you go to a staff member and say, look, you're being overworked here, I'm going to take this off your hands and I'm going to give it to somebody else. And they say, no, 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 I'm fine. It may be because that devolution of their duties will make it harder for them to keep stealing.
Well, that's really interesting because to some people, that might look like someone being very conscientious about their job.
One of the ironies, Jamie, is that superficially working for the practice and working against it don't look all that different.
I can
And
see that.
I have had many dentists say, no, no, that's the most dedicated employee I ever had. She gets there before everybody else. She stays late. Okay, it's happening. Like, smell the burnt toast, please. The cousin of territoriality is that thieves are very guarded about cross training anybody else on any part of their duties, or even taking what they do and documenting it somewhere, because those things also create the potential for redistribution of responsibilities.
Oh, wow.
So they don't like to do that. A lot of thieves will make a point of showing or demonstrating how honest they're being. And I'm going to make a basic observation about human nature. Honest people don't wave it like a flag. If you are truly honest, you don't have the compulsion to keep showing people how honest you're being. So when somebody kind of waves that in your face, they may be honest in the thing they've selected to show you right now, but
Never
that
thought
should
about it that way. That's interesting.
that should get somebody a little bit alerted. The other issue, of course, is they really try to keep outsiders away from the practice. If you say to your team, great news, I'm bringing in an awesome consultant, and that person's going to help us solve a couple of problems that we just haven't been able to deal with ourselves. And most of your staff are going, this is great. We get to learn something, we get to pick the brain of an outsider with some great ideas. And you have one person who looks a whole lot less happy about it than everybody else. That's another warning sign.
That is a whole box of red flags. There are so many there that you uncovered in just the last 2 minutes.
Those are the behavioral red flags. Let's talk about the financial.
Yes.
And these things are a little harder to spot in most cases. The first thing is a discrepancy between what a doctor's practice management software says was paid by patients and what went into the bank.
Okay.
Making allowance for the fact that sometimes a transaction is recognized by your software on a different day than it reaches your bank account. After working through that, those two should be identical. So last year, if your practice collected $1.4 million, there should have been 1.4 million, not 1.38, not 1.36 million that went into your bank account. So that is a huge warning sign. Other financial things, thieves steal one of two ways. If nobody is comparing collections against deposits, they just record payments in software and don't deposit the money, which is easy. And a thief who is neither smart nor industrious can get away with that one.
Okay.
If collections versus deposits are being watched and I'm a thief, then what I start thinking about is, how do I hack the practice management software to make it lie about how much money people pay? And that's another area where I'm not going to get specific, but I'll say that we see that all the time. So people are doing distortive transactions in software that
Wow.
make it underreport how much money patients paid. And that's the other financial warning sign. Depending on the magnitude of theft, it might show up in other ratios. So you might see the staff expense to production ratio go up or something like that. But if you're stealing on the revenue side, it just doesn't tend to make big impact on ratios.
Wow. I'm blown away by the dishonesty that you're talking about. But let's maybe look at it from a vulnerability standpoint. I mean, does it make a difference in terms of who's more vulnerable than others? Let's look at group size. What about the big DSOs? What about the small private group practice, which is a good chunk of our audience, that emerging group practice space that, maybe is not PE backed? Who's in a better position? Who's more protected and who's not?
Nobody's protected. And let's start by saying that this kind of crime is driven by the perpetrator. In other words, embezzlement happens because somebody wakes up one morning and decides that they have a higher right to the practice's funds than the practice owner does.
Wow.
And that can happen absolutely anywhere. I mean, there's no pattern to that. I get asked sometimes, are urban practices more vulnerable than rural practices? Or, do orthodontists get stolen from more than general dentists? And the answer to those things is no, their probability for everybody is equal. The
Well,
question though is how long somebody gets away with it undetected.
okay.
And that's where the configuration starts to matter. A better organized practice group with better systems is probably going to catch embezzlement more quickly than somebody who's disorganized. And you mentioned the emerging group practice market. That's one in particular where, in my experience, the control systems lag behind the growth. And a lot of the people who are running those groups are entrepreneurial and they're looking out for the next opportunity.
Sure.
And that's their focus rather than looking at what they already have and saying, all right, what do we need to do in systems terms? So that group performs particularly badly. Now, the other thing I'll mention is that the more offices and the more people you have, just by straight probability, the more likely it is you're going to be victimized this year. In other words, with Heartland Dental or Aspen, it's not a question of will they be embezzled in one of their 1,000 practices this year. It's how many times. If you had 5 or 8 practices, the absolute certainty that you'll be embezzled this year isn't there, but the chance is still 5 or 8 times the chance of somebody who owns a solo practice. So in terms of the question of whether it will happen or not, that's strictly driven by practice size. And the bigger you are, the more frequent it is this year. The final thing I'll mention about practice size and embezzlement is this. One thing every thief has to do is they have to rationalize. In other words, we all learned on the playground when we were 3 years old that you didn't take other people's things. And thieves were on that same playground you and I were. And so what they need to convince themselves is, I know that in general it's wrong to steal, but it's okay in this specific circumstance because, and then whatever they say after the because is the rationalization. And what happens is the bigger the group gets, the less likely it is that the person stealing even knows the practice owners or the management team. And the sense of guilt that you might have if you were working in a solo practice and you're stealing from the doctor who works 20 feet away from you all day and signs your paychecks isn't there. So it's easier to rationalize in a bigger group.
Well, and that's kind of where my thought process went to, is that they're so far removed from the owners. Is there just no sense of accountability? Or, I mean, we could go down a very long rabbit hole into the psychology of all that, but we won't do that today. And then if I look at the other side of the coin, it really does make sense for the emerging group, that they are the most vulnerable. We work with that group size so often, and they are so hyper focused on optimization, as they rightfully should be. But I could see when you take your eyes off of one aspect of the business, or you're not properly protected, is maybe a better way to say it, that this can very easily happen. And it'll really damage your growth strategy and the dream that you're looking to build.
Absolutely. And let's be honest, these are complex businesses.
Sure.
Even a solo dental practice is a lot more complicated in terms of its financial operations than it was when I started in this business in 1989. I mean, in 1989, the first practice I investigated got paid in exactly 2 ways. It was cash and check. And now you have practices that take cash and checks and credit cards and their electronic funds transfers. And some practices let patients pay by Venmo. And, you have a much more complex operation. And then when you move from that to an emerging DSO, for example, you add another layer of complexity because now you have associates. You might have owners of practices that you've affiliated with who are with you on some kind of earnout basis. And those are sometimes subject to manipulation. And you might have multiple practice management softwares running. I mean, I was talking to a DSO CEO the other day, and he said, "Yeah, we have 20 different practice management softwares running in our entity." Now, this is a big DSO, but their principle was when they affiliated with a practice, they didn't move from whatever software the former owner was using to kind of their standard software because it's expensive, because it tended to get the staff stirred up. So they've got 20 different softwares.
Exactly.
And, how you aggregate results across 20 softwares, or how you have somebody with enough knowledge in that software to look at transactions and spot anomalies is a big challenge. So let's acknowledge that this is a complex business that in a lot of cases is being run by somebody whose happy place is an operatory and being a dentist. And yeah, it's going to go wrong sometimes.
Well, yes, and those layers of complexity that we've seen develop over the years, it can create confusion, I should say, because, and I'll date myself like I've done on prior podcasts. When I started in dental, it was March of 1992, and we did everything on paper and we took cash or check. Super simple. I mean, those days went away really quickly, but it really kept things easy to track, easy to monitor. But sadly, those days are gone. And maybe not
It's
sadly.
it was a much simpler business.
It sure was. It sure.
When practice is computerized, that's when embezzlement really started to take off. Because if you think back to the days of pegboard, which is that old manual system that JP's referring to, you could see whose handwriting was used to make an entry. And the doctor at the end of the day was looking at individual transactions. And you move from that to practice management software, and now you're looking at reports. And reports by their nature are abstractions of transactions. And, thieves found a lot of opportunities there.
The pegboard, the good old days. But truly, practice management systems are fabulous now, and they are what
Well,
we.
we're not going back.
Yeah, no, we're definitely not going back, thankfully. But, there are so many beautiful things about practice management and the opportunities that and data that it provides. So we have to be able to work within those systems, and they support our practices. So we have to move forward with it. Now, I know that Prosperident focuses on more than embezzlement. Talk to me about litigation support.
Yeah, that's one of the two other things that we do. And litigation support involves working with attorneys, and typically it's dealing with some kind of dispute where somebody needs to find out what really happened. So, an example, Jamie, might be somebody buys a practice and they realize 6 months after they bought it that what they were told about the practice wasn't accurate.
Interesting.
And now they'll go get a lawyer, they'll want to get money back from the seller, or maybe even do what's called rescission, which is where they get all their money back and they hand the practice back to the person who sold it to them. So they're trying to get some kind of remedy like that, and our job is to find out what the true state of affairs was and whether what the buyer was told was accurate. So, if somebody was told there were 1,800 active patients in a practice, our job is to apply whatever yardstick was in the purchase agreement and see if there were in fact 1,800 active patients.
I feel like you have stories.
I, I have a lot of stories on that.
I'll bet.
Um, so that's one incarnation. The other one that we get into a fair bit is where you have a practice with multiple owners.
Okay.
And when you think about how multiple owners handle ownership, let's say there are two owners of 8 practices. One of those owners is going to kind of become the clinical lead. And they'll be the one who, for example, helps pick up practice equipment. So when they go to digital scanners instead of impression material, it's the clinical lead who will do that. And then the other owner becomes the financial lead and will kind of look after the money and dealing with the bank and all that kind of stuff.
Okay.
And sometimes the financial lead ends up abusing their position to take more from this than they should. And I'll give you a real life example. We did a case about a year and a half ago. It was two oral surgeons who owned 2 practices together. And one of them decided he was going to open a third practice on his own. In other words, not with the other guy. Okay, fine. But what he did was he ran the entire cost of opening the third practice through the partnership.
Oh.
It was about $350,000 that he put through the partnership to open his office. So the other partner, the one who was kind of the clinical lead, called us and said, this doesn't feel right. Our earnings seem to have taken a hit coincident with my partner opening his other office. Can you have a look? And yeah, it was about $350,000, including the $45,000 dinner that he threw for referral sources.
Oh my
Oh yeah,
good.
there were $1,000 bottles of wine getting opened that night. And I guess you could argue, Jamie, that of the $350,000, since he was stealing it from a partnership that he owned 50% of, that half that was his own money. But if you and I are partners in a partnership, I just don't get to reach my hand in the cookie jar whenever I want and take out my share. I mean, we do that together as a partnership.
Exactly.
So that's the kind of situation that we sometimes run into, and those are examples of what we do in litigation support.
Well, and partnerships can be tricky like that, as you said, if not managed properly, but it's good that you can sort through all of those things
You know,
if and when they happen.
every partnership is a challenge because you start with two people who share common goals and have a vision together. And when you go 5 or 10 years down the road, it's really easy for those visions to have diverged. And if their agreement with each other isn't well thought out, it's going to be a problem. And I remember two friends of mine years and years ago, they graduated from dental school together and they decided they were going to go into practice together. And it's all for one and one for all. So we'll just split everything 50-50. Well, fast forward 5 years, and one of them's now got 3 kids and is spending a lot of time as a dad and isn't necessarily trying to set the world on fire in terms of his clinical earnings.
Okay.
And the other guy's single and all he wants to do is make money. And the problem with that structure is that if you're in a 50-50 partnership, the way you win is you convince your partner to work hard. And that's exactly what was happening here. One guy was putting in 25% more clinical hours than the other, and yet they're splitting 50-50.
The minutia has to be followed to a T, truly.
And one of the jobs of advisors in a case like that is to say, I know you guys are in complete harmony now, but let's think through some permutations. What if one of you becomes disabled? What if one of you loses your dental license? I mean, we need a roadmap for those things too.
Absolutely. We work with some wonderful law firms when we are working on partnerships with our clients that lay out those very scenarios. Escal Law, in particular, that we've worked with in the past too, and kind of gave us a nice little overview on this at one of our sales meetings. They really walked through every one of those scenarios so they can bring a lot of confidence to that type of partnership and situation. But there has to be a layer of prevention built in around all of this. If I'm talking about embezzlement, litigation support, all of that, let's maybe shift gears and talk about prevention, financial controls, that type of thing, if you could.
Absolutely. And I'll mention that we do preventive work with practices, with groups, with DSOs, where we review their systems and help them find the weaknesses before a thief does it for them
Perfect.
and plug them. So some of the keys, and the first principle I think of control is that everybody in your organization needs oversight. In other words, if you own 5 practices and each is kind of its own kingdom with its own site manager, and there's no review by anybody else of stuff that happens in practice management software, something sooner or later will go wrong. So if you have a regional manager kind of structure, one of the key jobs of a regional manager is to keep an eye on the site managers and to review what goes on in practice management software. And a lot of groups are missing that really basic control. So if I'm a site manager and I'm kind of the king of my castle and nobody's looking in software, I will quickly find ways to make that software underreport how much money my practice collected, and I'll steal the difference. So 2 things have to happen. The first is reconciliation. In other words, there needs to be somebody, either regional manager or a head office department, that obtains reports from software, and they need to get them independently. You can't let the office manager of a site send you reports. They will quickly figure out how to do selective reporting and send you something that looks right, but isn't really what happened. So you need to obtain your own reports, and then you need to compare collections against deposits. That's step one. Step
Okay.
two is the thing I just mentioned, where you then need to look at individual transactions in practice management software. In other words, this is a very granular exercise, and see if there's something there that's going to distort how much money the software reports as being collected. I mentioned hiring already, and I'm happy if somebody in the audience wants to see if what they're doing sort of is optimal or not. I'm happy to have that conversation with them. But criminal records checks, drug testing, and speaking with former employers are three things you just have to do. 70 million Americans, which is 1 in 4 adults, has a criminal record.
Wow.
So if you're hiring without doing a criminal records check, you're playing Russian roulette, and you're on average every fourth time you're going to lose.
Oh my gosh.
So don't do that. And
Yeah.
it absolutely astounds me that the majority of dental practice owners don't drug test applicants. And one thing I see firsthand is the amount of crime that's driven by drugs, but also, unlike most businesses, dental practices kind of have the key to the pharmacy.
Yeah. Fair statement.
So that the hiring piece is the second part. And the third piece is division of duties. And when we look at the revenue cycle, there are basically 6 jobs that happen in order to put money in a practice's bank account. Treatment gets entered in practice management software. Patients and insurance companies get billed. Hopefully they pay. Those payments are posted, recorded to practice management software. There's balancing done at the end of the day by your staff, and there's a deposit. Those are the 6 revenue cycle jobs in a practice. I give group practices 3 rules for those. The first rule is the only people who should enter treatment are clinicians who were in the room when it was done. So if we're talking about work in a doctor's operatory, it's typically the assistant who's entering the treatment into practice management software. If it's a hygiene operatory, it's the hygienist. The old way of doing it, and if you go back to 1994 or 5, when practice management software first came into offices, there was one terminal at the front desk, and the only way to get treatment in that terminal was for the person at the front desk to enter it. And that was 1995, but there are still a lot of practices doing it that way.
Right.
So treatment gets entered by the clinicians, and that is an important separation of duties. You've got 5 tasks left, which is insurance and patients get billed, they pay, the payments get recorded, there's balancing at the end of the day, and then money gets deposited. And for those 5 tasks, I have 2 more rules. Nobody should be doing more than 2 of those.
That makes sense.
And the 2 that somebody does should not be consecutive. So the person who balances at the end of the day is not the same person who makes the deposit, for example. And the whole idea of division of duties is to make it so that if I want to steal from the practice I work in, I have to approach one of my coworkers and say, Jamie, I want to embezzle from the practice, but I really need your help. And the requirement for me to have that conversation with somebody else who I probably don't know all that well will stop about 85% of people from even trying.
You sure will.
So that's why we talk about division of duties.
Okay.
And, there are so many practices I see where there is one person at the front desk who is the nexus of everything financial in the practice. And they might even do all 6 of those jobs. And again, they have all kinds of chance to steal money and cover it up.
Sure. And I know I've had this conversation with our fractional COO executive, Aiden Bradley. He is hands on in these group practices. And oftentimes they're at that stage of their growth where they don't have the right people in the right seats yet. He works with them to make that happen and really to expand their executive team. But oftentimes, I'm sure if we asked him, he could say that there's one person handling all of those duties.
Yeah. And that's a head office problem when you have that chief financial officer who pays all the bills and does all the reconciling of what happens with individual practices and stuff. I mean, you can have an issue there. And you also have an issue at an individual practice level where you have that one person who does all of those 6 tasks that I mentioned. So yeah, division of duties is an organization-wide problem, and it has to be addressed both for head office functions and for individual practice functions. And the problem is every dentist practice owner just wants to get rid of this stuff and pass it to somebody else.
Sure they do.
And the easiest, most expeditious way to do that is to hand it to one person. On the other hand, when you start dividing up tasks among multiple people, now, sometimes you have to coordinate their work. Sometimes you have to mediate when they start throwing rocks at each other. It's a little bit less of a hand it off and forget about it kind of arrangement, but it's much, much, much safer.
Well, absolutely. And I think that we all want to tell ourselves that it's okay to trust in that way, but it's also okay to not open the door to those situational temptations for people
I
because
will
there's
quote a former president who once said, trust but verify.
absolutely. Yeah. Yeah. Good way to put it. David, what am I missing? What else do our listeners need to know?
Well, good question. They need to know that if they were running a solo practice, there would be about a 70% chance that they get embezzled in their career.
Wow.
If they own 10 practices, the probability is more like 70% that they'll get embezzled this year.
I mean, our audience can't see me, but my mouth is hanging open. Like half of the episode here. I just cannot believe that people do this, but obviously they do, is why you're in business.
That's why we're in business and why we have a team of 25 people.
Wow.
So if you're thinking, I have great staff and it won't happen to me, when you have that thought process, you pretty much guarantee that in fact it will happen to you. So we need to be skeptical. We need to be skeptical when we're hiring people. I mean, is the person in front of me telling the truth? You know,
Background's easy to do. That just seems like a no-brainer to me.
and sometimes it's really basic stuff. One thing I tell practice owners is when you're calling former employers, do not phone any phone number that an applicant gives you. Okay. So you say you worked for Dr. Mark Smith in Walla Walla, Washington, and I'm looking at hiring you. What I should do is go online, find Dr. Smith's phone number and call that number. Because if I call the number you give me, I might end up speaking to your uncle who's on a disposable cell phone. And he's been told when that phone rings to be Dr. Smith and give you a great reference. That kind of stuff is not sexy. It's pretty low tech. But to think that way, you just need a basic level of skepticism that unfortunately not everybody who owns a dental practice is gifted with.
Yeah, true. Sad but true. Gosh, this has been just very eye-opening, and it really has me thinking in a different way. Can you give our audience, kind of put a bow on it, 30 seconds of your best advice on protecting your business?
Yeah, I get a lot of calls from practice owners looking for systems that will lower their risk.
Okay.
And I always tell them the same thing. Those systems start with you. First of all, you have to behave honestly because if you cut ethical corners, first of all, your staff will see you doing that and will take that as the organizational culture. And secondly, they have you over a barrel. So if you're cheating on your income tax and they know that, they can probably steal from you with impunity. But when I say systems start with you, what I'm really talking about is you can never abdicate the financial management of your organization. You always have to accept that the buck stops with you when it comes to that. And if you're a small group, that means you are personally involved in things like reviewing collections versus deposits. And if you're in a bigger group, it means that you commit the resources and give the people the mandate to do that kind of verification for you.
This is not the place to be hands-off in your business.
No, and if you don't want to be involved in the finances of practice ownership, then my advice is don't be a practice owner.
Good advice. Good advice.
There are lots of other careers that you can have where you can be a pure clinician, but you can't be a pure clinician and own a single practice, let alone a group practice.
No, and you have to, as we've said many times on this podcast, is start with the end in mind. If your end in mind is to not enjoy all that you've built, then you should definitely leave this just to chance. And that's just not the way to go about it. But David, this is wonderful information for our audience. I can't tell you how much we all appreciate this. What's the best way to get in touch with you?
The best way, Jeep, is through our website, which is www.prosperident.com.
Okay.
or people can call our toll-free number, which is 888-398-2327.
Perfect. I'll link to your contact, website, phone number in the show notes. So be sure to reach out to David. And David, thank you again. We truly appreciate you.
It was a pleasure, Jamie.
Well, thanks to David and the Prosperident team. Go ahead and give them a call to get the conversation started because, as you know, we are big advocates of using the resources and experts that we bring on the show here. They're here to protect and help grow your business, so please give them a call. As always, if you'd like to schedule some time to learn about any of the Polaris expert advisory services, or maybe there's a topic we haven't covered that you'd like to hear about, you can send us an email to info@polarishealthcarepartners.com, or you can always reach us by visiting our website at polarishealthcarepartners.com. Thanks so much for being a loyal listener and subscriber. If you enjoyed today's episode, please share it with a friend or colleague, and go ahead and leave us a rating on Apple Podcasts, Spotify, iHeartRadio, or wherever you get your podcasts. We'll see you on the next episode of the Group Practice Accelerator Podcast.